What are the keys to managing risks in your energy sector investments?
The important thing about managing risk is that you actually understand the source of risk, but also you understand your attitude toward risk. And also you quantify the risk involved. If it's a small risk, do you really need to worry about it? If the likelihood of this risk happening is very low, again, do you really need to worry about it? But then when you have identified the sources of risk, it's important that you address each individual risk with a certain kind of mitigation. The best way of mitigating risk is basically shifting that risk to the person, the law firm, the technical advisor, the general advisor that know how to handle this risk. It's all about mitigating risk. There's no an investment that has no risk. Risk-free investment doesn't exist unless you don't want to make any money. So the minute you need to generate a return for your shareholders, for your investors, you will have to look at risk and mitigate this risk. But where there is risk, there is an opportunity of generating a return.
What are the differences between measuring traditional political risk and the risks associated with climate change?
There is substantially no different in terms of approach. The point is that related to climate change, there is no track record. There's no instrument that can show you in the stock exchange how the stock changes due to climate change. So as a scientist in this field, we need to create formula and we need to create a plug to interconnect the climate change risks with evaluation of companies, of project or whatever. But the basic means are the same. We just need to find a language to have climate change science speaking with risk science related to evaluation.
How is the decoupling of traditional relationships in the energy sector changing paradigms?
That's a very good question. Traditionally, energy and GDP were very much correlated when the equation was based on conventional fuel plants, that's oil, gas and coal. Now that we are entering a market where energy efficiency is much more important, combined heat and power plants and renewable energy plants are, as well as demand side measures, are allowing this decoupling to take place. And what this does, it breaks the notion that in order for the economy to grow, more power plants have to be built. The answer is clearly that better power plants need to be built, smaller, decentralized, delocalized power plants, individual power plants. And if you couple this with the revolution that's occurring in the battery space, individual consumers of energy, if they have a battery such as a Tesla Powerwall and solar panels on their roof, become producers as well as consumers. And this reduces the need to build more power plants and hence reduces the energy intensity and also reduces the need to build large transmission lines. And energy becomes a more localized and fungible commodity.